I've heard a lot of discussion recently about a bubble, specifically the AI bubble, and it's really started the last year or so. Basically, when Nvidia ran up from about 40 to, well, 400 it used to be, to over 1,000, or 40 to over 100 after they split. I've heard a lot more about bubble, AI bubble, and I wanted to weigh in my thoughts in this video about that specifically. So the first thing that's important to look at is actually look at numbers. We have a good metric for what a bubble was. We've seen it before. That's the reason why we use that terminology. And if you don't get it, I'm sure almost all of you do, but when a bubble pops, it goes away, and when the bubble pops for the stock market, your share prices go very, very down. So people are worried about that sort of thing, and I understand it because we've seen a lot of growth. Specifically, we have seen an increase in PE. Historically, the NASDAQ does not trade above 30. The S&P 500 itself is right around 30 PE as well. Historically, that is high for it. However, when we're comparing it to the dot-com bubble in 2000, it really isn't that comparable. And the reason I say that is, even though 35 PE does seem high, it seems maybe too high for you, we do have to factor in that in the dot-com bubble, the NASDAQ specifically, which is tech stocks, it was mostly a tech dot-com bubble, PE was somewhere in the 200s, which, yeah, so we're a bit of a ways off here with that. Now, that is just one data point, and we can't completely discredit it just off one data point, so let's look at another. Of course, this is just another perhaps cherry-picked example, but Qualcomm, right? Many of you know where I'm going with this. If you saw my videos from a few days ago, they had an earnings, they fell from 176 to 167. Okay, boo-hoo, who cares, right? Not a huge substantial drop even. No one's really freaking out. However, the point I'm saying this is, you may say, okay, they had a bad earnings. Actually, they had a pretty good earnings. Was it outstanding? No, it wasn't outstanding. But they guided, I think, what? They beat by 14% and guided decently well, somewhere in that 10 to 15% range, which doesn't sound great. They're not a company that's expensive. PE 18. They do tech. They're in the tech field. One thing you'll commonly see in a bubble is good news is good news, and bad news is good news. The stock goes up on maybe a meh to a borderline bad earnings. You'll, of course, not terrible, but you'll still see companies moving up. It's like, oh yeah, they'll have a positive spin on everything. You see that in bubbles. You see that quite often. Everything just goes up. It 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 goes up. And yeah, some things are going up, but even we see with like an Nvidia stalled out. When we saw that DeepSeek scare a week and a half ago, wow, things were falling 14%. Nvidia fell 14%. TSM fell 16%. Maybe if you have some smaller, maybe not microcap, but just non-S&P 500 tech stocks. I saw some in my portfolio, or that which I watch fairly closely, fall 10, 15, 20, 30% in one day. Yes, that was, maybe the market said it was a bit scary, but generally, and not saying you can't ever have a 15% drop back, but generally, things like that even wouldn't have that negative of a spin to it. You can still see the market is still reacting to negative news fairly dramatically, fairly how you would expect it to. My personal opinion right now is that no, I don't think we're in a bubble, at least one that's comparable to 2000. We don't see the market run up from in 1995 to 2000, where it almost tripled in price, something crazy like that, 97 to 2000. I don't think we're at levels like that. I think it's a faulty comparison. However, the sentiment that, hey, we're a bit expensive right now, that may be real. I'm not discounting that at all, and I don't want to belittle that idea that, hey, we're a little bit on the more expensive side. So we can see, like, from lows in 2022 to 2023, the market's been very optimistic, and for the most part, it's been going up. This is, of course, not the S&P 500, but basically the NASDAQ. So we see that run up, and it's pretty extreme, and we see the PE levels, and they're on the higher side historically. So that means two things. That means, hey, if earnings don't catch up, the AI doesn't turn into anything, you'll see, the money that's being poured in from the Mag 7, Nvidia's profits, it's going to take a step back. If they can't monetize this AI, yeah, you're going to see, not only are you expensive, you're going to see a drawdown because companies aren't making as much money as they thought, but also that inflated PE is going to go down. It just is. Or what's going to happen is PE is going to go higher because they're making less money. Drawback's going to happen. Although, okay, let's dive into one other side of it first, which is also when you're at PE levels this high, if you get a recession, something like that, you're going to fall even harder because you're higher initially. So when things go poorly, you're going to fall even more. That is a thing. Now, my personal opinion on AI, though, is I am a fairly firm believer. I'm not the highest on it. I don't think it's just everything's gonna be worth $1 bajillion in 3 years because AI is gonna revitalize everything and everyone's gonna lose their job. I'm not necessarily saying that. However, I think at least cloud computing, data center area, very, very, very important. AI basically is that. It's just another data center. But I think certainly when you see Amazon Web Services, like they're making a lot of money from that. Microsoft Cloud, making a lot of money from that. They see AI as an extension and another subsection of that, an adjacent, a cousin to that maybe, and another area to make money and monetize it. That's what they're looking at. And I think personally, if AI went away, I still think the cloud space is very, very important. Data center space is very, very important. I work basically in that sort of environment, and I see the merit of it, and it's just very important in my opinion. So I think there's a lot of companies like an NVIDIA that's still gonna now. Would they see a downturn if AI? Oh, absolutely. But they still do very important computing power in this sort of area. So that's my personal opinion. Maybe you are someone who thinks the market is a little hot, a little expensive right now. That's fine. That's okay. Buy some value stocks with lower PE. Buy some dividend stocks. Keep it in a CD. That's okay. The rates are still okay right now. They're not as good as they were, but they're going to continue to drop probably in the future, years and years from now. But also keep in mind, those of you who have money in for retirement, things like that, if you're decades away from that or even 15 years, 10 years away from that, historically, even if you, like I said, if you buy the tippity top all the time, you're still going to, in the long term, perform very, 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 very well, much more so something like cash, even if it's scary when markets are dropping. So keep that in mind. I can't hit every point. Every one of you is in completely different scenarios. Some of you watching this have $500 in your bank account. Some of you watching have $500,000 in your bank account plus. I almost guarantee it. I have a very large, diverse audience. I can see in the statistics. So I can't speak to everyone's specific situation. However, just keep in mind long term, doesn't really matter what the PE is today, because in the long term, if you zoom out, it looks good. Even if you bought tippity top at 2000, looks like a little speed bump. So anyways, I appreciate all of you for watching. If you enjoyed, appreciate if you like and subscribe. I do daily stock content on this channel. I do deep dives into specific stocks. I've done the Mag 7. I do plenty of others, even value stocks that no one cares about, but most of them are pretty good anyways. But I appreciate all of you for watching. I'll catch you next time.